What happens when the world starts running out of silver? Not gold, not oil, not lithium. Silver. A metal that most people associate with jewelry, coins, or family heirlooms. But beneath the surface, silver has quietly become one of the most important strategic resources in the modern global economy. Today, silver is embedded inside solar panels, electric vehicles, advanced semiconductors, artificial intelligence infrastructure, medical equipment, telecommunications networks, and military technologies. It is a critical component of the systems that power the modern world. And yet, something remarkable is happening. Demand for silver is accelerating at a pace few analysts expected. At the same time, some of the world's largest silver-producing regions are facing growing challenges that threaten future supply. Two countries sit at the center of this story: Peru and Mexico. Together, they account for a significant portion of global silver production. For decades, these mining powerhouses helped satisfy the world's growing appetite for the metal, but now both nations are encountering disruptions, political uncertainty, regulatory changes, infrastructure constraints, and investment challenges that could affect future output. What most investors don't realize is that silver markets are already tighter than they appear. Inventories have been declining, industrial consumption continues rising, and new supply is becoming increasingly difficult to bring online. The result is a growing imbalance between what the world needs and what miners can realistically produce. Could the next major supply crisis be hiding in plain sight? And if these trends continue, the consequences could reach far beyond the precious metals market. To understand why this situation matters, we first need to understand silver itself. Silver is often categorized as a precious metal alongside gold, but that description only tells half the story. Unlike gold, which is primarily valued as a store of wealth, silver plays a critical role in industrial production. Think of silver as the electrical nervous system of modern technology. Silver possesses the highest electrical conductivity of any metal on Earth. It also has exceptional thermal conductivity and reflective properties. These characteristics make it extraordinarily difficult to replace. Inside solar panels, silver helps convert sunlight into electricity. Inside electric vehicles, silver supports power management systems, charging infrastructure, and electronic controls. Inside semiconductors and advanced electronics, silver enables reliable electrical connections. Data centers powering artificial intelligence applications rely on equipment containing silver-based components. Medical devices use silver because of its antimicrobial properties. Defense systems incorporate silver into communications equipment, radar technologies, and precision electronics. In other words, silver is not merely a commodity, it is a foundational input for many of the industries shaping the future economy. And here's where the story becomes alarming. The world is pursuing multiple trends simultaneously: electrification, artificial intelligence, renewable energy, digital infrastructure expansion, advanced manufacturing. Each of these trends requires silver, not one of them, all of them. The result is a growing competition for a resource that remains relatively limited, and that's creating a problem nobody seems to be talking about: the Peru problem. Let's begin with Peru. Peru has long been one of the world's most important silver-producing nations. Its vast mineral resources have helped supply global markets for decades. But in recent years, Peru has faced increasing instability. Political turmoil has become a recurring challenge. Changes in government, public protests, and social unrest have created uncertainty for mining operations. Mining companies depend on stability. They require long-term planning, infrastructure investment, labor coordination, and regulatory predictability. When uncertainty increases, investment often slows. Labor disputes have also emerged as a concern. Mining projects can face interruptions when workers, local communities, or transportation networks become disrupted. Even temporary interruptions can have meaningful consequences. Silver markets are surprisingly sensitive. Unlike many commodities, there is relatively little excess production capacity waiting on the sidelines. When one of the world's largest producers stumbles, the entire market feels it. Infrastructure presents another challenge. Many mining operations are located in remote regions where transportation networks remain vulnerable to disruption. Road blockages, logistical bottlenecks, and supply chain interruptions can all reduce production efficiency. The real issue isn't demand. The real issue is that global supply systems have very little room for error. When Peru experiences production challenges, global markets notice, and if disruptions become prolonged, the consequences extend far beyond the country's borders. But Peru is only part of the problem, because another silver giant is facing challenges of its own. Mexico occupies a unique position in the silver market. For years, it has ranked among the world's leading silver producers. Its mining industry represents a cornerstone of global supply. Yet beneath the surface, important changes are unfolding. Regulatory uncertainty has become a growing concern among mining companies. Changes to mining policies, permitting processes, and resource management frameworks have increased questions about future investment conditions. Mining is a long-term business. Companies often invest billions of dollars before a single ounce of metal reaches the market. When regulations become less predictable, investment decisions become more difficult. Environmental pressures are also increasing. Governments and local communities are demanding higher environmental standards and greater oversight. While these goals can provide important benefits, they may also lengthen development timelines and increase project costs. Now pay close attention. One of the biggest concerns isn't today's production, it's tomorrow's production. Mining companies must continuously explore for new deposits to replace depleted reserves. But exploration spending has become increasingly selective. Fewer discoveries today can translate into lower production years from now. And silver mines face a unique challenge. Many silver deposits are not pure silver mines. Instead, silver is often produced as a byproduct of mining operations focused on lead, zinc, copper, or gold. That means silver supply is frequently dependent on the economics of entirely different metals. If investment slows in those sectors, silver production may suffer as an unintended consequence. This creates a structural vulnerability that many investors overlook, and when combined with Peru's challenges, it raises serious questions about future global supply growth. This is where things get interesting, because even without major disruptions in Peru or Mexico, the silver market has already been experiencing a growing imbalance. Global silver demand has been exceeding newly mined supply in recent years. In other words, the world has been consuming more silver than miners have been producing. That gap has often been filled by existing inventories, recycling, and stockpiles. But inventories are not infinite, and this is where the situation becomes increasingly complex. Many of the world's major silver mines are aging. Ore grades are declining. That means miners must process larger amounts of rock to extract the same amount of silver. Production costs rise. Operational complexity increases. Efficiency declines. Meanwhile, discovering and developing new mines has become more difficult. The easiest deposits were often discovered decades ago. New projects are frequently located in remote regions with challenging geology, limited infrastructure, or significant permitting requirements. Even after a discovery is made, bringing a new mine into production can take 10 years or longer, sometimes much longer. This means supply cannot respond quickly to rising demand. Imagine trying to build an entirely new oil field every time gasoline demand rises. The process takes years. Silver faces a similar reality. What most investors don't realize is that today's investment decisions determine production levels many years into the future. If exploration slows today, supply constraints may emerge years later. At the same time, industrial demand continues expanding. Solar energy installations are growing. Electric vehicle production is increasing. Data center construction is accelerating. Advanced electronics consumption remains strong. Each trend pushes demand higher, and that's creating a problem nobody seems to be talking about. The silver market doesn't simply need more production. It needs significantly more production, and there is little evidence that enough new supply is arriving quickly enough to close the gap. The global energy transition may intensify these challenges. Governments around the world are investing heavily in renewable energy infrastructure. Solar power sits at the center of many of these plans, and solar panels require silver, lots of it. As countries pursue ambitious climate targets, demand for solar installations continues climbing. Each new solar farm adds incremental demand. Each rooftop installation adds incremental demand. Collectively, the numbers become enormous, but that's only part of the problem. Electrification extends far beyond solar energy. Electric vehicles require advanced electrical systems. Charging networks require infrastructure. Power grids require modernization. Energy storage systems require sophisticated electronics. Many of these technologies depend directly or indirectly on silver. Government incentives are accelerating adoption. Corporate sustainability commitments are accelerating adoption. Consumer demand is accelerating adoption. All of these forces point in the same direction: higher silver consumption. And because these trends are tied to long-term policy objectives, demand growth may persist for years rather than months. That creates a structural challenge that cannot be solved overnight. So what happens if these trends continue? Let's consider three possible scenarios. Scenario 1 is mild supply stress. In this environment, mining production grows modestly while industrial demand continues rising. The result could be gradually higher silver prices and tighter inventories. Manufacturers may experience slightly higher input costs, but supply chains remain functional. Scenario 2 involves persistent deficits. In this scenario, demand consistently outpaces supply for several years. Inventories decline further. Competition for available silver intensifies. Prices may rise more substantially as buyers compete for limited material. Technology companies, manufacturers, and energy developers could face increasing procurement challenges. Investors may begin paying greater attention to silver as a strategic resource. Then there is Scenario 3, a major global silver shock. This would require multiple disruptions occurring simultaneously, significant production challenges, strong industrial demand, declining inventories, limited new mine supply. Under such conditions, markets could experience substantial volatility. Prices could move sharply. Manufacturers might face shortages. Project timelines could be delayed. Investment flows into precious metals could accelerate. Importantly, this is not a prediction. It is simply a scenario analysis, but it highlights an important reality. Silver is becoming increasingly important to the modern economy at the exact moment supply growth appears increasingly constrained, and that combination deserves attention. The silver story is no longer just about precious metals. It is becoming a story about industrial policy, energy security, technology development, and global supply chains. Peru faces political and operational challenges. Mexico faces regulatory and investment concerns. Mining companies face declining ore grades and aging assets. Meanwhile, demand continues rising from solar energy, electric vehicles, artificial intelligence infrastructure, advanced electronics, and strategic industries. The result is a market facing growing pressure from multiple directions simultaneously. Could new discoveries emerge? Certainly. Could technology improve efficiency? Absolutely. Could higher prices encourage additional production? Yes. But all of those solutions require time, and time may be the one thing the market has the least of. What most investors don't realize is that commodity shortages rarely announce themselves in advance. They build gradually, quietly, then suddenly. The silver market may not be at that point today, but the warning signs are becoming increasingly difficult to ignore. The question is no longer whether silver is important. The question is whether the world can produce enough of it. If you found this analysis valuable, subscribe for more deep dives into global markets, precious metals, and the economic trends shaping our future.